Welcome to the Essential Tax Podcast with your host, Mishkin Santa. In each episode, we'll take the complex world of tax, all the jargon, acronyms, and stuff that make your eyes glaze over, and explain it in an impactful way to understand the complex and unknown areas. You can find this show on all the major platforms, including YouTube, LinkedIn, Apple Podcasts, Spotify, and on our website, thewolfgroup.com. Now, here's the host of Essential Tax Podcast, Mishkin Santa.
Hello, everybody. Welcome to the podcast. Today, we've got the hottest place that everyone wants to move to. All my clients constantly ask or tell me, I'm moving to Spain. I'm going to be in Spain. I want to live in Spain. How do I get to Spain? What do I do when I'm there in Spain? And my response is, I don't blame you. Spain is a beautiful country. There's a lot of cool things you can do in Spain. But you got to be, if you're a U.S. person going inbound into Spain, there's a lot of things that kind of like a wrinkled shirt. You need to iron it out and make sure you got all your T's crossed and I's dotted and understand how to work on the Spanish side, how to work on the U.S. side. So today's guest is going to give us as a tax practitioner in Spain. Carlos, welcome to the podcast. Let's start by just maybe giving a quick summary about your education, background, licenses, all that jazz. Give our listeners kind of the background on who you are.
Thank you so much, Mishkin. First of all, thank you for the opportunity to be here with you in this podcast. I have checked some of the podcasts that you have already made with other jurisdictions, and I think that it's very, very good value that you're spreading here. Thank you. Terms of knowledge, education, tax stuff, and well, happy to be here and to share a bit more about this knowledge and focusing on the Spanish side of taxation and the international cross-border matters that we might liaise, especially with the US, but with many other jurisdictions as well. As you may know, I'm a international taxation specialist in Spain, and I'm a lawyer myself. I'm an economist, so I have the dual business and law degree by University Pompeu Fabra at Barcelona. I did my Erasmus in Scotland, in St Andrews. So playing a bit of golf over there as well, and well, I have been practicing as a tax lawyer for more than a decade already in big four such as Deloitte, also in other multinational firms such as BDO, and also I have been in a couple of small medium law firms. But in one of them, we had the chance not to be part of the Next International Network. There is where I had the opportunity to meet with you, Mishkin, and I'm very happy with it. And the same happens with all the professionals that are in the network, which I think that are very good professionals and good people, which is most important.
Yeah, absolutely. And where in Spain are you located at right now?
I'm based in Barcelona, but I am working with respect
to... Awesome.
To
so let's...
Yeah.
Okay. Let's go through some basics of Spanish tax, because I think the first thing I want to do here is kind of set it up like building blocks. I want people to understand some of the basics of what happens when you go inbound into Spain. So my first big question, and this is the question I ask for just about any other tax practitioner I run into, is how does someone become a tax resident of your country? What's the secret sauce? What's the formula? At what point does someone become a tax resident of your country? So for Spain, how does someone become a tax resident of the country? And then I guess my sub questions to that would be, once you're a tax resident, are you subject to tax on worldwide income? And what are your ranges for income tax rates once you're a tax resident? Mm-hmm. A lot of questions there. Apologize in advance.
Yeah, no, but I will go by order. And in this respect, tax residence in Spain is computed or checked on a calendar year basis. So you're checking from 1st January until 31st December. And we have different criterions in order to see whether, according to our domestic rules, you are a Spanish tax resident. First of all, we have now the 183 days rule. So as long as you spend more than 183 days within the calendar year, then you're considered as a tax resident, unless that you can justify that you have been a resident in another jurisdiction. And to do so, you have very important evidence, which is a certificate of residence in the other jurisdiction. And with respect to that criterion, it's important to take into consideration the concept of sporadic absences, which is applied by the Spanish tax authorities and is stated within the Spanish law, whereby any period that an individual have remained abroad, but for a short period of time, those short absences are considered as days spent in Spain. So you have to be careful with that when counting days, because if you fall into the concept of sporadic absences and you do not have a certificate of residence in the other jurisdiction to go against this deemed consideration of days spent in Spain, then you may have an issue when counting the days. The second criterion that we have to determine the tax residence is the center of economic interest. It is a concept that it's a bit more narrow than the one that you will typically see in the OECD treaty model, which is the center of vital interest. That one is much broader. We focus on the center of economic interest when checking where are the ties, the economic ties or professional ties with respect to the country. But we still check on the personal aspects, because we have a presumption in the law where, in case that your spouse and children are also considered as tax resident in Spain by any of the two criteria that I was explaining before, then you are also deemed tax resident. So at the end of the day, either if it's as a consequence of the days spent or as a consequence of having your family here, the personal aspects also matter when determining the tax residence. The implications of being an ordinary tax resident, and I'm saying ordinary tax resident because there is a special tax regime that I guess that you would like to cover afterwards, which is the Beckham Law. But let's go step by step. And when you become an ordinary tax resident, you are taxed on a worldwide basis, as you were saying, and all types of income are taxed in this respect. Even when determining the type of income, we have two main types: the general income, where we fit basically active income, salaries, business activity income, and the passive income, which would be savings income, which is interest, dividends, capital, short-term and long-term capital gains derived from the transfer of assets, income derived from insurance policies. So all that more sort of passive income is taxed on a lower scale in comparison to the general income, which is taxed at higher scales. The general income ranges from 19 up to 50%, whereas it varies. It's a lot. The taxes in Spain are quite high unless that you are able to plan it properly.
Okay.
And this 50% varies from autonomous region to autonomous region, because the autonomous regions in Spain have the possibility to regulate a lot of aspects of the tax, and in particular, the tax scale is usually one of these aspects. So you will find little differences in this respect. For example, in Madrid, the top band is 45%. In Valencia, which is the highest one, you have 54%. In Catalonia, you have 50%, Andalusia 47%. So there are a lot of difference depending on the autonomous region where you're heading. And when it comes to savings income, no, the passive income, this would be taxed at a tax scale that ranges from 19% as well, but up to 30%. Last year was
Okay.
28%. They increased at 2 points already, up to 30%. In turn, the corporate income tax rates, they were lowered a bit so that you do not have the effect, not that when you are obtaining income in a corporation and afterwards you're distributing it to your personal sphere, since there is double taxation and there. So at least since they were increasing up to the 30%, the savings scale, at least lower a bit the taxation when it comes to corporations, but only for those that whose turnover is lower than 1 million.
Okay. So
Um,
gross income or net income? Is that what you mean by turnover?
yeah,
Okay.
turnover, yeah.
Okay. All right. When is the Spanish tax return due? What's the due? Like when's your tax season? When is your tax return due? So for example, in the United States, our tax season kicks off normally around the middle to late January, and our tax return is due, generally speaking, April 15th. If you live offshore, it's June 15th. But when's tax season in Spain, and then when's the Spanish tax return due?
So for individuals, the tax season starts in April and finishes the 30th of June, and for corporations, it's July. So from April until July, better not to to
Not to poke the
expect,
bear.
yeah, a high speed from the tax advisors. But well, yeah, this is the peak season. But since there are a lot of obligations as well, for example, for corporations, we have installment payments which are due in April, October, and December. And for transfer pricing declarations, we have November. So there are a lot of obligations spread during the year. So I would say that we are always busy, and that maybe the couple of months which are more calm, it's August, where everyone closes the windows, and also September, where everyone is getting again starting into the business. I would say those.
Okay. And I think you just answered this question, but it sounds like if you're not having tax withheld and you know or you think you're going to owe tax on your tax return, you'll make quarterly estimate or some kind of prepayments or estimated tax payments. Is that what I heard you say as far as the different months that you were rattling off for making
Yeah,
payments due?
it is exactly that. So when you are obtaining business activity income and there is no withholding applied,
Mhm.
then you must report that on a quarterly basis in April, July, October, and January with
Okay.
respect to each of the
And if you
quarters. Yeah.
if you if you fail to do that and you owe the tax, is there a penalty for? I'm assuming there's at least interest on the tax payment that you make. Is there a payment for not making the prepayments?
Yeah. So in case that you have already filed the tax return and therefore fulfilled with respect to the annual tax liability, there would be no tax liability imposed there. It is true that in case that you have not filed the tax returns, they could come to you and ask for the penalty of not filing in time the quarterly returns.
Okay. And does Spain, in the United States, we have a significant regime about reporting foreign financial assets under the Foreign Account Tax Compliance Act, the Bank Secrecy Act. Those are the notorious FBARs and FATCA reports. Does Spain have a similar type of regime where if you're living in Spain, so for example, I'm a US person, I'm living in Spain, and I've got a bunch of US bank accounts, maybe a brokerage account, do I need to be reporting all of those financial assets, the values of all that stuff to the Spanish authorities?
Yes, this obligation has been in place since 2012,
Okay.
And it was a consequence of a tax amnesty that was carried out in the country, where basically you had the chance to regularize assets abroad by paying a tax of 10% with respect to the value of those assets. And there was a lot of people who was taking advantage of this amnesty, but the immediate implication of that was the imposing of an obligation on an annual basis, which was the foreign asset reporting declaration. This runs since 2012 on, and I think that in an attempt of imposing high penalties, such as, for example, the approach that is taken under FATCA, the tax authorities were requesting penalties for the lack of filing, which were totally disproportionate in comparison to the penalties that were in place for informative returns in Spain of similar characteristics. To put you an example on that, there was a penalty for the lack of filing of 5,000 euros per data, with a minimum of 10,000 euros, meaning that in case that you fail to report accounts, bank accounts abroad, and which had 5 mandatory data, you could face a penalty for the lack of filing of such a bank account of 25,000 euros for the only fact of not reporting.
Wow. That's
Yeah,
more extreme than in the US.
yeah. But this is a story. This is not applicable anymore because the European Court of Justice came, and in 2022, a resolution was issued saying that this penalty regime was totally disproportionate. That did not make sense at all, and therefore it was abolished by the Spanish government since then, and we still have the obligation. We still know the penalties for lack of filing of informative returns still apply, but not with this level of yeah, of penalties, of high penalties, which were imposed according to the previous regime. And with respect to that, not only these high penalties were imposed, but also there was a proportional penalty of 150% of the value of the assets that were not reported, which was understood to be a capital gain taxable at the general tax rate, so up to 50% in the last year, not the statute varied. So it was totally this, yeah, horrible. Anyone knew what to do with respect to that obligation when they already failed in reporting, because the regularization involved such a huge tax liability when it comes to making things well, that no one dared to report. So they achieved the contrary the contrary effect, right, by following such an arduous approach on the penalty regime. But now
Yeah, I
this
mean,
is a story. I would recommend to still fulfill the obligation, considering that it is in place, and also that the penalty regime is not that much severe as before.
yeah, I mean, there's something to be said about the carrot and the stick, and I've always, U.S. You can end up having draconian penalties like that as well. They tend to stack them up. So we are in the U.S. we have the $10,000. Everything's $10,000, right? You fail to file Form 1, Form 2, whatever it is, it's $10,000, and they start stacking that stuff up, and quickly, you can see someone get up to 200, 300,000 US dollars penalties, and sometimes I have to relay that to a client. And you can just see the blood kind of drain out of their face, and really, I mean that it's overkill. It's too big of a mountain, to swallow. And I think if the U.S. just kind of maybe even cut that in half and said, look, it's going to be a $5,000 penalty or $2,500 penalty, I think that would still be enough to kind of push people to want to do the filings. But it doesn't have to be so outrageous that it gets to the point where people think they're going to be crippled just by those penalties. So something I think that a lot of countries should think about when imposing this type of reporting. And I know in the U.S. we have an upcoming, we have a new tax code coming into play, and there's been a lot of talk about, potentially reducing the amount of reporting that needs to be done by people that are bona fide residents of a foreign country. So it'll be interesting to see how that plays out with our new U.S. tax code, which, knock on wood, according to recent reports, should be out sometime in August. So anyway, getting back to Spain though. So I'm hearing a lot of cool things here. Calendar year, once you're a tax resident, which the tax residency test is somewhat objective, somewhat subjective. But once you're a tax resident, worldwide tax on all sources of income, worldwide informational reporting on foreign financial assets. Tax can be withheld, but if it's not, you're making estimated tax payments. I thought I heard you say that on passive income, there's not really a capital gains tax. It's just a different type of the tax is limited from 19 to 30. Would that be correct? So there's no specific CGT tax for Spain.
No, correct. It is considered as another type of income within where the savings scale also applies. Yeah, from 19 up to 30%. So the capital gain that you're obtaining is taxed at these rates. Yeah.
Okay. And so in the United States, that does create a little bit of a problem. We have some really, really crazy and very hard, complex rules to follow called the special capital gains tax rate differential. So anytime a capital gains tax rate is different from our capital gains tax rate. So generally, the U.S. capital gains tax rates are split into three buckets: 0%, 15, and 20. It's progressive. So if someone comes in with a 25 or 30% capital gains tax rate, that can create that differential. And then the reporting on that can be quite complex. It's not something I would do on a DIY software. You kind of need an accountant to walk you through that. We also have the net investment income tax, which is under challenge as to whether or not a foreign tax can be credited against that. Would love to have a U.S. taxpayer challenge that under the U.S.-Spain tax treaty. Currently, that's not in play. The challenges are in France and Canada. But that's another interesting aspect of that differential that I think people need to be aware of. Okay, last two basic questions of Spanish tax. Does Spain have a gift tax? Does Spain have an inheritance tax? And if so, what are they?
Yeah. No, it has both of them, either the gift tax and the inheritance tax. The Both of them are accrued in the core of the beneficiary. So the one that is receiving the assets, is the one who pays the tax. And the tax scale, in general terms, ranges from 7% up to 34%. So it can also be quite high. And the point is that this tax is partially seized to the autonomous regions when it comes to the regulating some aspects of the tax and also the collection of the tax. And as a consequence of this, you will see also a lot of disparities amongst autonomous regions when it comes to that. For example, in Madrid and Andalusia, there is and in Madrid there is a 99% allowance. In Andalusia, there is a 100% one. So in Valencia, for example, there is an exemption threshold of 1 million. In Catalonia, I would say that it's one of the low. All these beneficial aspects that I'm talking about is for inheritance or gifts that takes place between direct descendants, ascendants, or spouses. So there is a beneficial treatment for close relatives when it comes to gift tax and inheritance tax, but it's important when you have a U.S. person who wants to relocate to Spain. It's very important for them to know which is the autonomous regions where they are relocating, because depending on that, the implications for inheritance and gift tax may vary a lot. And it's always a good tax planning to make the gifts beforehand, so that if there are any consequences in the specific region where they are going, to avoid those in advance. This also applies for the wealth tax, which I think that we also will cover afterwards.
We'll get into that. Yeah.
Yeah. and And basically, the story is the same. Some disparities, although since 2022 they imposed the solidarity wealth tax to try to uniformize the taxation in the whole country. And actually, the government has announced that they intend to do the same when it comes to the inheritance tax for those inheritance which are higher than 1 million. So what the government is trying to do there, when it comes to these taxes, which are regulated on a state basis, but afterwards there are some elements of the tax that can be regulated by the autonomous regions, and in practice make those taxes not applicable because they are applying 100% allowance or 99% allowance. What the government is trying to do when imposing a common solidarity wealth tax for the whole country, or a common inheritance tax after tax for a tax base higher than 1 million for the whole country. It's trying to uniformize and avoid the battle amongst autonomous regions to compete for attracting talent, investment into the autonomous region by means of lowering direct taxation and boosting the indirect taxation in terms of consumption and investment into the specific region. So the small room for maneuver that the autonomous regions had with respect to some of the taxes that they were managing afterwards is being paralyzed or eliminated by these policies that the central government is taking when imposing national taxes, which at the end of the day are a duplication of the tax that was already existing. Of course, there is a formula to deduct what you eventually pay in the regional wealth tax, for example, when it comes to the solidarity tax. And I guess that something similar will be done if finally this common inheritance tax is introduced. But at the end of the day, they are avoiding this possibility for the autonomous regions to have their own tax policy when trying to attract investment in the specific regions.
Okay, interesting. And just a quick clarification: there is a VAT tax, right? Just so for everyday living, you're paying VAT on things that you're buying.
Yeah.
Correct.
Yeah. The general tax rate is 21%. We have a reduced rate of 10% and a super reduced rate of 4%. Yeah, for some
Okay. Let's
essential goods.
Okay, let's switch gears for a second. Let's talk about if someone comes to me and they say, "Well, Mish, what I'm not an immigration person, but people will come to me and say, Mish, what's the best way to get into Spain? Do they have a golden visa program, or the other one I hear a lot of is, I'm just going to move to Spain and not tell my employer, and they're just going to be working on their laptop, and they've seen the digital nomad visa being advertised all over the place." Can you talk to us about the way you're seeing most people from the U.S. coming inbound into Spain, like what visas they're using? And then can you just highlight for a little bit the digital nomad visa, and so people can understand what that is?
Mm-hmm. Yeah. So there are different visas that are available for non-EU citizens that want to come into the country. Since 2023, the digital nomad visa has been in place and has been a trending topic because you have the possibility to keep working for your former employer, and as long as the relationship has been there for quite a while, the company abroad existed, and so on. This is a very valid possibility to get the visa in Spain. And this would be the digital nomad visa for employees. And there is a sub-alternative also of the digital nomad visa, which is also available for freelancers. So freelancers that come here, they had a couple of clients or one client, and most of the income that they obtain as a consequence of developing this business activity comes from abroad, in particular more than 80%, then they qualify for the purposes of the digital nomad visa. So it is quite easy to be applied. It is true that the employee option, no, it may seem super easy, but it has some implications, mostly for the employer. So the first question that you have to make, to those clients is, have you told your employer about the intentions? Because take into consideration that this might have implications for them in terms of
Yes.
withholding taxes, social security registration, social security contributions in Spain, which are not that bad because it is at 30% on the employee salary, but it is capped for salaries which are higher than 55,000. So at the end of the day, we are talking about a liability for social security purposes of 18,000 euros, which is not that bad. But it's important for the clients to know that this may have implications for the employer, besides all the risks that, depending on the position that they are having in the company, this can also trigger a situation of permanent establishment. And even in case that we are talking about fully owned companies, attraction of residents, and so on. So it's very important to have all these aspects in mind when deciding to go for the digital nomad visa. Up to now, we had also a very good golden visa regime, but as the audience may know, this has come to an end. In particular, will be in early April that it will be finished. And so there is not available anymore the golden visas for the acquisition of properties for 500,000, or investments in bank accounts or financial or investment funds for 1 million, or bonds, government bonds by 2 million, which were the options that were there. And indeed, this is a pity, because for sure it will have implications, as Spain being the door of entrance into Europe for a lot of non-EU citizens, and reduces the possibilities when coming here. Additionally to the digital nomad visa, there was an entrepreneurship visa which was created. I think that this one is quite good. And the main intention of this one is to boost innovation into the country. So they are focusing into business that have an innovative element and also scalability, right? So research and development businesses, technology business, formation business. For example, in like you here with the podcast, you're creating content, and
Right.
and at the end of the day, this is as long as you have some authority and you can show yourself as an authority when in your specific area of knowledge to the community, you may end up having subscriptors and even selling masters related to what you're showing to the audience with respect to a niche of knowledge where you are an expert of. So basically, all these innovative business which are scalable and so on are the purpose or the object of this entrepreneurship visa, which was also put in place jointly with the digital nomad one. And the good one of this second one, the entrepreneurship visa, is that you can connect it with the Beckham Law, right? So you may have access under the Beckham Law. There is a clear red line, or there has been a clear red line when it comes to all those individuals that came here and were freelancers. So you could not have the Beckham Law when you were a freelancer. This entrepreneurship visa, I would say that is the door that is being opened to those individuals that want to enter into the Beckham Law, becoming freelancers or owning a service company, as long as this is an innovative and scalable company business. Yeah.
Okay, yeah, fantastic. The entrepreneurship visa sounds like you've got me talked into that. Um, let's get right into the Beckham Law, and I guess the question that I wanted to ask, where it's the typical podcast question: what are the three most common tax issues for a U.S. person going inbound into Spain? But the Beckham Law is, in my opinion, the number one issue. So why don't you go
Mhm.
ahead and let our audience know what is the Beckham Law? How does it work? How do you technically? My understanding is it's an election you make. So talk to me through about the actual like compliance portion of it for a little bit, and then if there's any other common issues that are subsidiary to that. I think we've worked on clients where the S corp I think has been a big problem. U.S. S corps owners going inbound into Spain, but if there's a couple other examples of common issues that you want to raise, that'd be great too.
Mhm. Now, when it comes to the Beckham Law, it's a favorable tax regime. Formerly, it was set as a regime in order to attract working talent, I would say. Basically, high positions, chief officer positions, and to be developed from the Spanish subsidiaries of the group. But with time, it has been evolving up to the point that in 2023 the scope for that was broadened a lot, as long as it was possible also to enter into this special tax regime for those investors or owners of Spanish companies which had more than 25% of a stake in those companies and were directors thereof. Historically, you had like the two typical options to get access to the Beckham Law, which was the employee one. You could come here as a consequence of a local contract or an intra-group transfer. And also there was the possibility of becoming a director of a Spanish company, but in such a situation you could not have more than 25% of the shares of that company. So basically, the regime was focused to attracting working talent, because if you do not have more than 25% from a social security standpoint, you will always be deemed an employee. Whereas if you have a managing position, you're the director of the company, and you own a stake which is higher than 25%, then from a social security standpoint, you will never be treated as an employee, but as a corporate freelancer. So
Okay.
the limitation historically applying was that the Beckham Law was applicable for working talent. In 2023, they accepted the possibility of being a director of a Spanish company and owning more than 25%. The only requirement for that is that this company had to be active, must be active. And here, this is something that must be assessed. So you could even create a new company. Actually, this is done by a lot of our clients, creating a new company, making sure that since the very first moment they are fulfilling the requirements to be understood as an active company, but then as a consequence of that, get access to the regime. So as long as you're setting up a business in Spain, you're running this business, you're supervising it, and your position of director, you could qualify for the purposes of Beckham Law since 2023, because they broadened the scope. And I think that the idea there was not only to attract the working talent, which was already coming, but also investors,
Oh,
which is what precisely boosts a bit the economy. And it is true that when advising high net worth individuals, a lot of times you see that the business that is being developed in Spain in comparison to the net wealth that is dislocated abroad,
yeah.
um, is not that relevant. But there are binding rulings saying that such a proportion is not necessary. Or when the question is made in those binding rulings, the General Tax Directorate is not forbidding the application of the regime as a consequence of this proportion not being kept. So, and it makes sense, because at the end of the day, why are you opening the Beckham Law regime to attract to attract investors when you know that you have a wealth tax in Spain, and that if they bring in all the net wealth with them, then they will be taxed for that. Because the Beckham law, I would say that I will go one step backwards when it comes to the Beckham law, which are the benefits of that, which are that you are only taxed for the Spanish source income and for Spanish source wealth, net wealth,
Oh,
basically. With an exemption, with an exception, which is salaries that are taxed on a worldwide basis at a 24% rate up to 600,000 euros and 47% for the excess. But other than that, with respect to the rest of income, you are only taxed when this income is obtained in Spain, or the net wealth is located in Spain. The thresholds that we were commenting before that are applicable for the regional wealth tax and the solidarity tax are applicable also here, but only with respect to those assets that are located in Spain. So definitely, it is a good approach and a good option when it comes to avoidance, not avoidance, or not paying the wealth tax. And I would say that there are other measures that can be taken out, that can be carried out or planned to mitigate the wealth tax bill. But I would say that the Beckham law is the number one rule. It's applicable for 6 years, and basically, well, and there is another requirement, which is that you have to be a tax resident in the previous 5 years before the relocation takes place.
okay. That's a great summary of the Beckham Law. Before we get into some of the other tax issues, I know that there was a recent hubbub or kerfluffle, if you will, as we say here in the U.S. There's a UK law firm that was publishing articles about Spain doing a bait and switch scheme where you had foreign executives coming inbound, doing the Beckham Law election, and then getting audited by the Spanish tax authorities to basically say they don't qualify. What can I don't really believe everything that is published. I take it with a grain of salt. But can you kind of tell us what's going on there? Are there issues with whether or not people are qualifying for this election, or are there people using the election improperly? Is that the flip side of the coin?
I would say that it's more this second point, right? So
Okay.
so at the end of the day, when you're introducing a tax advantage and you are not carrying out tax audits on it, then you want it or not, you're broadening, no, the application of this tax benefit up to the point that you find a lot of advisors, local tax advisors applying it without a deep knowledge about how the regime works, which are the red lines, and which are the aspects that which are the areas that it's better not to walk in. So I would say that it's more the second point, no, where of course, if you have a tax benefit, and you are offering it within the law, but afterwards you carry out tax audits and get the totally opposite effect when it comes to people relocating. This is something that it's not a good approach. It's not a good state approach. What the people or the clients must know there is that the Beckham Law regime works. It's a very good regime. The tax advantages are clear, but it's necessary to fulfill these requirements, and it is a complex regime when it comes to doing things properly. Because the Beckham Law, if you want to apply it for working talent, I would say that it's pretty easy, because you just have to have an employment agreement, and as long as this is a valid employment agreement, the labor relationship exists, and so on, this would be okay to apply the Beckham Law. When it comes to attracting investment, the the requirements that are within the law are a bit more complex, and you may have red lines in aspects such as, for example, having a service company when you could develop the business as yourself. This is a red line under Beckham because you cannot be a freelancer, so that you create a company to develop this business. But if you do that, then you are in danger when it comes to the Beckham Law. And you will find a lot of setups, Beckham Law setups, where these structures crossing the red lines were applied. And this is where the tax audits may take place. And this may be the feeling now of this firm that published this article, this article in the newspaper, saying about all the bad things about Spain, only due to the fact that tax audits were carried out. I think that the mistake there was that a lot of tax advisors were applying Beckham Law when not totally fulfilling the requirements when it was necessary to do so. So my recommendation there would be to have a proper tax advisor and make a proper tax planning when it comes to the Beckham Law, and check at the possibility of applying it, because there is another important point, which is the causality, right? The Beckham Law requires that the move to Spain is as a consequence of this business opportunity. And sometimes you have totally the opposite situation. You have a client who has spent here some time, and they decide that they want to live in Spain for the rest of their life, but they have already spent 1 year here. Then such a causality between the move to Spain and the business opportunity that being obtained afterwards is not created. And this is the essential aspect, and I would say the most important one to check when applying the Beckham Law, to meet this causality requirement between the relocation to Spain and the business opportunity. With non-EU clients, it is better because the fact of having to check at a visa that is working for immigration purposes, mandatorily obliges the client to check at the options at least within a period of 90 days, which is the period that they may stay, and therefore there is a bit more room for maneuver when it comes to that. But now that the golden visa is not in place anymore, then you have to focus on other options, such as the digital nomad one for employees, because the freelancer ones would not work for Beckham, or the entrepreneurship visa, which is a bit difficult to apply because it requires a separate organism to validate that indeed your business will be innovative and will be scalable. So definitely, before applying the Beckham Law as it was done in the past, very broadly, have expert advice, and check at the requirements, check at the gray areas, do not walk in them, and for sure not cross the red lines, because otherwise you will have a tax audit in 3 years' time regularizing all the worldwide income during that period of time, and also the worldwide wealth. And definitely this is something that you do not want. Yeah.
Yeah, no, absolutely. My big takeaway there is just exactly what you said. It sounds like that in the United States we call that, principal purpose being tax avoidance, right? That's why the person that lived there for a year decided to set it up later on, because they realized, oh goodness, if I just do X, I can get a smaller tax rate. It's not, you're putting the cart before the horse, as your example kind of illustrated. But my big takeaway there is get a good professional that understands the rules and that can kind of, make sure to document it and, put it in the work papers. And so my advice to anyone listening to the podcast, go see Carlos, let him do the analysis for you. Let him make sure that, you're going to qualify under that Beckham Law election, chew the fat on those different types of visas and kind of the tie-ins that go there. Let's shift gears for a sec. Let's talk about, and briefly talk about S Corps, and if you have the ability to talk about it, the Roth IRA. these are concepts that are very common inside the United States. So a lot of small business owners will use what's called an S corporation to do their business. Or people will use, in the United States, we have individual retirement accounts, and we have a really cool one that came into being, I believe, in 1999 called the Roth IRA. There are only 9 countries in the world that recognize the Roth IRA. Spain is not one of them. And to my understanding, Spain would look at an S corporation very similar to our concept of a C corporation. They, instead of seeing it as a transparent flow through, Spain's going to look at it like it's opaque, and that can create a double tax issue. Talk to me about your viewpoint on that, Carlos. What happens if someone comes to you and says, "Hey, I'm coming to Spain. I'm going to live in Barcelona, and I'm operating an S corp in the U.S." Yeah, what's your first initial impression of that? What would you tell them?
Yeah, no, definitely. This is a point to check, and the same happens with LLC. As long as there is a look through effect in the states, what Spain does is to follow the very same treatment. So to also look through, I think that this might be an issue in many. So in one aspect, no, it's good because at the end of the day, the taxation takes place at the core of the individual in both jurisdictions, and therefore, if there is any double taxation, there are tools to avoid that one. But for example, in combination with the Beckham Law, no, since one of the red lines is that you cannot be a freelancer as long as you are a shareholder of an LLC or an S corp, where you are looking through and understanding that all the business activity income that is obtained by the company is directly attributed to the shareholders, you may end up in a situation where the Spanish tax authorities, following also the look-through approach when it comes to that corporation, understands that the Beckham Law, for example, is not applicable. Or you have an individual moving to Spain, keeping the LLC or the S corp in place, not transforming it into a C corp, although a priori it may seem more tax burden because you have the taxation at the core of the C corp, and afterwards the taxation towards the individual when profits are distributed. It is true that the tax rates in Spain are much higher than the ones in the US at a personal level. So just moving to Spain without considering about your corporate structure there and what should be changed or switched so that it fits within the Spanish system is something that definitely must be checked beforehand, because even following the look-through approach that the states may have with respect to those entities, you may end up in situations where you are paying a much higher tax liability on that.
Yeah. And one of the solutions could be to get rid of the US LLC or S corporation and open up a Spanish company if you're wanting to be that entrepreneur and have your own business, and then make what's called a check the box selection for the US side to maybe treat that as a disregarded entity. You can do that as long as the Spanish company is not what we call, and my Spanish is awful, so forgive me, the Sociedad Anónima, or SA. If it's an SA, you can't make a check the box selection in Spain, but anything outside of that, you certainly can. So I think for people that have the S Corp or the LLC and then want to continue to try to run a small business like that, there are a couple different ways to approach it. And my advice is to look at all your different options with someone like Carlos and kind of walk through, okay, if I have $100 of income and I spit it through the different models, what's that's going to look like in Spain? And then how's that going to tie back to the US? So that you have a clear understanding of which one's the best one for your particular facts and circumstances. Let's shift gears here because we're going to run out of time. I just want to quickly talk about a new law in Spain, or at least I think it's a new law, and maybe I'm off base on this one, but is there a new kind of tax rule that says that if I'm a non-EU resident and I want to purchase real property in Spain, I've got to pay a tax of 100% of the value of that property? Help me understand what's going on here with this.
Yeah. So far, with respect to this, there has been an announcement by the government about the intention to do that. It is true that the housing in Spain, no, it is a trending topic in terms of keeping the housing for the Spanish people. This is one of the reasons why the golden visa was removed, precisely to avoid, no, a situation where most of the properties were owned, since the threshold was very low because it was 500,000, and it has been in place for many years, since 2013. At the end of the day, with the inflation and the prices getting higher, 500,000 property it's almost, and I would not say an average property, but it's getting there, right? The market. So this was one of the reasons why the golden visa was abolished by the Socialist Party, and also this announcement for me it's a clear indication of the intentions of the government to keep protecting housing in Spain. I do not know up to what point this will be fulfilled, whether it is a populist announcement or there is part of reality. And indeed, if you can establish such a high taxation, because at the end of the day, the principle of non-discrimination is a worldwide principle, and if you are establishing such a differentiation, right, with respect to non-EU countries, just because the potential buyers of properties of those jurisdictions are the ones which have more capacity to tackle those investments. I do not know how they will set this tax so that it's not disproportionate, discriminatory, and that fits in within the constitutional, the Spanish constitution. But let's see how it develops, because uh, some people also thought that the golden visa was a bluff, and finally it took place, and therefore I I would not say, no, don't worry, just a populist announcement. So maybe there is part of reality there, and we will have to follow the events that happens. For now, the tax does not exist. It has not, but let's see the future events to follow this closely, because it might be a huge impact when it comes to attracting foreign investment, indeed.
Okay, fantastic. Well, look, we're out of time today, so we're very quickly before we sign off here. Tell the folks how it works with your company if they want to come talk to you and get a tax consultation or get Spanish tax returns done. Just walk us through real quick. Do they email you? Should they fill out a form? How does the whole intake process work? Give us just a quick 30-second elevator commercial.
Yeah. I recently started my own business, so I'm in a stage where I still can define how to approach it. But my idea is to have a sort of family office addressed to high net worth individuals, and offer the personalist treatment that is necessary when tackling at taxation. So basically, offering services to high net worth individuals and the corporations that they want to handle from Spain, and also assisting in all the topics regarding the relocation, whether it's inbound or going abroad. And yeah, happy. I don't know if you are putting the LinkedIn
Well,
link
absolutely.
after.
Send us
Yeah.
all the links. We're going to put it all in the show notes. We're going to link everything there for how you get in touch with Carlos. I'm going to try to link up a couple links for I made some notes here for the entrepreneurship and digital nomad, Beckham Law, just so that folks have kind of an easy guide to kind of walk through. So we'll link it all up.
That's great.
So there's a lot of stuff we didn't talk about. Just to conclude here for a second, there's a lot of stuff we didn't talk about. So a couple things I want to highlight. There's no gift and estate tax treaty between the U.S. and Spain. there is a pretty decent income tax treaty between the U.S. and Spain. I definitely would love to have you come back on the podcast to talk about that. The Spanish, I don't think we gave enough time to the wealth tax or solidarity tax or the startup act. I believe there's an exit tax in Spain. So I want to talk about, we talked a lot about today about going inbound into Spain, what it's like to be in Spain, but we didn't really talk about leaving Spain. So I would love to have you come back and maybe, there's a whole, I always tell people there's a lot going on with Spain. There's a lot of, when you talk about your checklist, it's a whole laundry list of things that you got to work through. I think we hit a good chunk today, but would love to have you come back on the podcast in the future, maybe round out that list and kind of give us the stuff we didn't get to today. So definitely we'll look forward to having you back sometime soon.
Of course, I will be very happy to do that, and to be in another podcast with you, Mishkin. Yeah, for sure.
Absolutely. Well, thank you, Carlos.
Thank you so much.
You've been tuning in to the Essential Tax Podcast with your host, Mishkin Santa. You can find this show on all the major platforms, including YouTube, LinkedIn, Apple Podcast, Spotify, and on our website, thewolfgroup.com. Thank you for your positive reviews, comments, questions, and for sharing this show with others.